Ask around from any wealthy individual and get to know how much they value their investments. Stock investments are strategic in amassing wealth, and that is why it is important to study the company you want to buy stock from and know how they operate and their potential in the stock market. Nio is one of the great companies that have lots of potential in the stock market, and that is why we will be discussing why its stock price will hit $500. Hey guys, before we continue, kindly do us a favor by giving us a thumbs up and also hitting the subscribe button. See that bell icon? Hit that too to get notified of our other videos. Thanks a lot. It helps more than you think. Before we get into it fully, let's have a brief talk about the company. Nio was founded in November 2014 by William Li, the chairman of BitAuto and NextEV. After launch, several companies invested in Nio, including Tencent, Temasek, Sequoia, Lenovo, and TPG. Its first model, the Nio EP9 sports car, debuted the same day the brand was established. In October 2016, Nio announced that it had been given an autonomous vehicle testing permit by the California DMV, and it would begin testing on public roads under the Autonomous Vehicle Tester Program guidelines as part of its autonomous vehicle program. According to the company, it planned to launch vehicles with level 3 and level 4 autonomy. In May 2018, Nio opened its first battery swap station in the Nanshan district of Shenzhen, Guangdong, China, dubbed the Power Swap Station. Only batteries from the ES8 cars would be available from this station. In September 2018, the company filed for the US $1.8 billion initial public offering on the New York Stock Exchange. In late April 2020, Nio announced $1 billion in new funding from a group of Chinese investors, which was needed due to the company's struggles to sell its vehicles. As part of the deal, Nio would transfer assets to a new subsidiary called Nio China, which will be headquartered in Hefei. In August 2020, Nio launched Battery as a Service, or BaaS, and formed a battery asset management company in collaboration with contemporary Amperex Technology Company Limited, Hubei Science Technology Investment Group Company Limited, and a subsidiary of Guotai Junan International Holdings Limited. Each contributed 200 million renminbi into the venture for 25% equity. Battery as a Service helps lower the purchase price of Nio electric vehicles by about 25%. In May 2021, Nio announced a Norway expansion plan, saying it would begin delivering cars to Norway by September 2021. Nio stock declined by almost 4% over the last 2 weeks and also remains down by about 17% over the last month. While the sell-off is driven largely by macro factors, such as the Evergrande crisis in China and rising bond yields, there has actually been positive news on the business front for Nio. Nio recently posted stronger than expected delivery growth, with its electric vehicle sales standing at 24,439 units over Q3 2021, ahead of the upper end of the company's guidance of 23,500 units and almost 2 times versus last year. The company has also delivered a total of 10,628 vehicles in September, a monthly record and a year-over-year increase of 126%. These growth rates are particularly encouraging as they come despite the ongoing chip shortage, which has hurt production across the auto industry. So is Nio's stock likely to decline further, or are gains looking more likely? Going by historical performance, there is an equal chance of a rise or fall in Nio's stock over the next month, after declining by 17% over the last month. That said, we think Nio still looks quite attractive for longer-term investors. Although Nio stock trades at a relatively high 10 times consensus 2021 revenues, it should grow into this valuation fairly quickly. Sales are projected to grow by about 120% this year, and by almost 65% next year, per consensus estimates. Margins have also shown an increasing trend, with gross margins increasing from levels of around 8% in Q2 2020 to around 19% in Q2 2021, meaning that Nio should be quite profitable as it scales up. Now, with the stock down by about 37% year to date, and by over 45% from its all-time highs, this could present a nice entry point for investors. Electric vehicles are the future of transportation, but picking the right EV stocks can be tricky. There are a couple of developments that have hit Nio and other Chinese EV stocks recently. Last week, China's Minister for Industry and Information Technology said that the country has too many EV players, and this is likely causing some apprehension among investors that the EV space could see more interference from the Chinese state, given the big regulatory crackdown on Chinese internet companies in recent months. Separately, there are concerns that China's second largest real estate developer, the struggling Evergrande Group, could default on its debt. The company apparently has liabilities to the tune of around $300 billion, and a default could impact Chinese banks and credit markets, potentially spilling over to other areas of the Chinese economy. Evergrande also invested considerably in an EV subsidiary that hasn't shipped any vehicles to date, and that is also likely causing some overhang on EV stocks. But now that Nio stock has seen a negative 5.5% move over the last month or so, will it continue its downward trajectory, or is a recovery imminent? Going by historical performance, there is an equal chance of a rise or fall in Nio stock over the next month. Sometimes good investment opportunities come for reasons unrelated to the company itself, or even the business sector. China's regulators have come down hard on the electric vehicle sector, and recently the fear of loan default by a large Chinese real estate company has shaken markets globally. It is no more news that in China itself, the turbulence has also hit growing companies. Widely followed Chinese EV maker Nio relies on a manufacturing partnership with a state-owned company. With the government cracking down on business, investors might be wondering if it's too late to profit from this growing sector. But there are several reasons Nio may just be getting started, providing an opportunity for risk-tolerant investors. Nio's stock peaked in early 2021 with its American depository shares priced at more than $60, representing a market cap approaching $100 billion. That constituted gains of about 1,500% from January 2020, when the company began to solidify a troubled balance sheet. But the shares have been cut in half since the peak, and with the uncertainty related to US listed Chinese stocks, some investors might think that gains from the stock are in the past. While the company still isn't profitable enough, if investors can absorb more macro risks associated with regulators and potential government intervention, there are some bright signs that the business itself is getting ready to take off. In May 2021, Nio renewed a manufacturing agreement with its state-owned partner through 2024, with plans to double the annual capacity to 240,000 vehicles. The company believes demand supports that growth. Nio also has 3 new products it plans to launch in 2022, including the ET7 luxury electric sedan. China's market and beyond. The ET7 will be the first sedan offered by Nio, and it is getting closer to mass production. The company recently announced it has completed an extreme heat test on the sedan, which verified the stability of the ET7's thermal management system, performance of the powertrain system, and the battery cooling system under extreme heat conditions. Beyond China, Nio plans to launch the ET7 sedan in Norway next year, where it has already sent the first exported shipment of its flagship ES8 SUV from Shanghai. CEO William Li says, "Our target is to have ET7 in Germany by the end of 2022, according to online industry publication Inside EVs." The car was recently shown in Germany along with the Nio Eve, an autonomous driving concept car that it says was the inspiration for the ET7. And the automaker isn't just planning to sell vehicles in new markets. The official launch of the ES8 in Norway comes on September 30th. With pricing and exact specifications to be announced, Nio Norway General Manager Marius Heiler said the company will then open a Nio house on October 1st. There are currently 28 Nio houses across China, which are meant to develop and support the community of its EV users, innovating for customers and investors. In addition to the ET7, Nio reportedly plans an ET5 sedan as another new product next year. The vehicle, which will be positioned below the ET7, is expected to be announced at the company's annual Nio Day in 2022, according to the Chinese auto industry website Autohome. Innovation isn't restricted to new vehicles either. The company also announced a new 75 kilowatt standard range hybrid cell battery to replace the 70 kilowatt version. The company says the new battery, which was developed with patented technologies, has an extended range at cold temperatures. Due to technological efficiencies, the company will offer the new battery at the same price as the previous 70 kilowatt version. It now is available for new orders along with its longer range 100 kilowatt battery, and both come with the option to add a battery as a service subscription, which gives the company another income stream while differentiating itself from other competitors. Nio's Power Solutions service offers chargeable, swappable, and upgradable batteries. Nio isn't alone in attempting to expand an EV business in the largest global automotive market, and its competitors in China are also growing their businesses outside the country. For investors, risks of owning Nio include competition, political uncertainty, and its status as an as-yet unprofitable company still valued at almost $60 billion. But for aggressive investors with long-term views who believe believe in the growth story of the company and the EV sector, it might not be too late to buy Nio. Slow and steady for Nio stock. Let's just get this out of the way. We think Nio stock can hit $500. Obviously, it will take some time for Nio stockholders to see that vaunted $500 per share figure, because Nio will eventually be a very dominant global EV maker. The company has a leading technology platform that is allowing for the creation of super high performance EVs that are rivaled by only a few competitors in the market. Nio is also leaning into its battery swapping model to reduce the cost of those EVs. It's therefore one of the best EV makers in the world at optimizing the cost performance trade-off for consumers. In China, the company has basically already won the battle, because the government has made it clear that they are going to support Nio's growth. In Europe, the company will soon sell its vehicles in Norway and should soon turn into a big player. In North America, the road will be longer and tougher, but the company has sufficient technological advantages and strong enough brand equity to at least marginally penetrate the North American EV market. The numbers. To get to a Nio stock price forecast of $500, here are a few critical assumptions. First, we assume global EV penetration of the total auto market of more than 35% by 2030. Second, we assume Nio can secure more than 8% market share in China. That's roughly the same percentage of China's population that are high-income earners. We're assuming here that Nio dominates the premium EV market in China and is also able to win some share in lower-end markets. This too seems appropriate to us given Nio's home court advantage. Third, we assume Nio can grab hold of about 4% market share outside of China. That's half the China penetration rate. We think that's fair because it accounts for increased competition on a global scale. Fourth, we assume around 25% gross margins for Nio in the long run, and around 10% operating expense rate for 15% operating margins. This is similar to what Tesla is operating at today. We see no reason why Nio can't tap into the same economies of scale to achieve a similar profitability profile. There you have it all, guys. If you haven't hit the like and subscribe buttons, it goes a long way, much more than you think. See you in the next video. Have a great one.